Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Prashant and Sonia. This of course is start of a new week, truncated week. We have the Dussehra holiday in between. The global markets once again are seeing a deep sea of red. There's a big risk off which is led by the US market. When we closed at 3:30 on Friday, the US futures were up, but they're ending 500 points down. This Credit Suisse issue which is raising Lehman fears, right or wrong. The Fed's closed door meeting today though is something which a lot of people are hoping that could maybe change things. We'll find out, because the big question is, has the Fed over tightened already? But the SGX Nifty is off the lows but still indicating a gap down 144 points. Prashant, Sonia, morning.
Hi, morning Anuj. Morning
Good
Prashant.
morning,
So what's up? What else is up today, right?
Congratulations, Anuj.
Thank
I mean, for those not aware or have not been on social media or Twitter, etc., Anuj has been named the managing editor for CNBC Awaz and CNBC Bazaar. So big congratulations.
Thank you
Absolutely.
from all of us. Thank you.
Congratulations. And well, I don't know, I mean, what's going to happen now to our trio? That's the big question, right?
I'll be here. I'll be here. Don't worry, Sonia. I'll be here. But yes, it's an honor and a privilege to be leading the team there, and to stay part of this great network.
And I'm sure you're going to do a great job at it, but we only care about the party, so nothing else matters to Prashant and me, and that's coming for sure, right? But it's no jokes what's happening across the globe. I mean, even the Dow on Friday had a big fall. It's now a 52-week low for the Dow. The S&P 500 has fallen 9.5% in the month of September. So I guess that Green Day song, Wake Me Up When September Ends, everyone on Wall Street is going to be singing that. But the big talking point globally is what's happening with Credit Suisse, right? The CEO of Credit Suisse said, he released a statement over the weekend saying that the bank is at a critical moment and they're preparing for a complete overhaul and restructuring. Now, a lot of people are talking about this perhaps being a Lehman moment for the globe. Only time will tell, but it's not looking good for Credit Suisse. The shares touched a record low. The default swaps climbed to the highest in the last 10 years. So that is really the big talking point globally. For our own markets as well, there was a rebound that we saw on Friday, but how do global markets negotiate these events, and will that drag our markets in general, and will it be under pressure? That's the big worry. The SGX Nifty, of course, is indicating that the start will be well in the red. So the momentum that we had on Friday, do you think that could see a pause?
Well, Sonia, for starters though, it's the 8th day of Navratri, right? The Ashtami, and the color for today is peacock green, right? So I'm hoping that there's some green on the screen at some point. Look, our market has been quite resilient, and Friday's big rally has once again raised hopes of that decoupling theory still being intact. See, decoupling doesn't mean that if the US market collapses 20%, Indian market rallies 20%. But decoupling means what we have seen so far, which is that our market doesn't fall as much as the mother market does, or as the other markets do. Our market has been the most resilient market, and based on good factors, we have been a ranked outperformer, both in terms of economy and in terms of market, in terms of macro. So that's the reason, and that's why it's actually good that we have seen outperformance. Now, because there's a gap down, you need to know where the supports come in. The major support is the 200 exponential moving average of 16,877, which is what the Nifty has not violated so far. And if you go by Friday's low, 16,747, that's line in sand. I think today's move will test the market's texture, because if the first hour low is protected, then perhaps the market can have a rally. Because after a gap down, I doubt if there will be an attempt to have at least one rally. That is my sense, given Friday's big bar. And Bank Nifty will have to lead it if it has to, because that rallied 3% on Friday. It's the market leading index. Policy is out of the way. So let's see. And FIs are still massively short, 1.14 lakh contracts. So let's see. For the day, SGX Nifty low will be the reference point. But Prashant, lots happening.
Most of the action happened after. I was there for Bazaar on Friday, and then I was unwell, so I left. But most of the action happened after that, right? After going into the RBI policy and after.
Yes.
And the flow number was quite amazing. FI sold some 2,000 crores plus in cash, and they has about 3,000 crores plus. So just very large numbers on both sides. Net numbers is what I'm talking about. The point is that global markets are in a bit of a crisis mode right now. That's how I would describe things. And there are three basic factors for this. Number one, real rates in the US and around the world are rising and this is a global phenomenon, even as growth is slowing down. This is, I mean, the opposite of what should happen when growth is slowing down. I mean, you take the US 2-year, for example, you take the nominal minus the break-even, the inflation expectation, that is now at about 2.3%. It's the highest since COVID 2020. Or you go back and look at, the 10-year. So, I mean, things are, that's the number one indication of what the market seems to be pricing in. Real rates are high, and rates volatility is also extremely high. It's again the highest since March of 2020. And this is a toxic combination for financial assets, and I'll explain in just a bit why. And some of it, of course, we saw in the impact of some of this we saw in UK, etc. Dollar strength, and the dollar is, reasonably well behaved. It was almost 115. It's at about 112 right now. But the fact is that these conditions point to the fact that dollar perhaps remains higher for longer, even if there are intermittent pullbacks, as happens with everything. And the dollar strength right now is hurting the rest of the world more than the US itself. I mean, actually, people are talking about a pivot from the Fed. But the fact is, you look at the latest data, the income data, spending data, most data points out of the US, they're just fine. I mean, this is expectation of what all this tightening will do, and that is kind of causing markets to, again, latch on to the pivot narrative that, well, there will be a pivot sooner than later. But you look at the data, and that is telling you that things in the US are fine. It's the rest of the world which seems to be in a bad place. Will that cause the Fed to pivot? I don't think so. All right. What all these three things mean in the context of an absence of a policy put. I mean, when I say a policy put, there is no central bank backstopping any trouble which may arise and saying, well, we will not let financial markets get too disorderly or too dysfunctional. We don't have that right now. And I think that is the big problem, naturally. Which means that there is a risk of all of this spiraling into unforeseen kind of developments. I mean, Anuj mentioned, this entire Credit Suisse thing. Now, we have no idea what really happens with Credit Suisse, although this, rumor of trouble with Credit Suisse, Deutsche Bank, etc., come about frequently. But the fact is that the tide is going out of global markets for now, and weaknesses get exposed. You can go back in history and look at things like Enron, Lehman, you can look at, where all other sort of troubled events, large events, shocks to the system over the last 20 years, and they all happened when growth is slowing and Fed is hiking. It basically signals that tide is going out and weaknesses, fragility gets exposed. No specific comment to Credit Suisse because we just don't know what will happen. Nothing may happen. Over the last 2 weeks, some of this manifested, these risks manifested in what we saw in the UK. Massive rise in UK yields, bond yields, and there were margin calls. And now we understand from reporting from Financial Times, etc., there were fire sales by some UK financial institutions as well. I'm just sort of including this to tell you, this is not to say that same thing will happen somewhere else. This is a narrow UK-led thing in the UK, but it kind of is symptomatic of what kind of risks may arise in other places around the globe as well. The good thing, or the silver lining, there is a growing list of prominent economists, like, for example, the Harvard economics professor, who has joined a long list of slowly growing chorus of the fact that Fed could be over-tightening. Will this, slow chorus become very pressing kind of demands that Fed slow down, and will that have any impact in the Fed? We'll need to see. And inflation expectations are slowing in the US. So just last week, US inflation expectations fell. They're down another 20 to 30 basis points. I'm talking about the Michigan inflation expectations data, which came out on Friday. Things are looking a little fragile. I said this on Friday as well. What happens here in India, of course, has been something very different, with no connection to what is happening to the globe. And there may be good reasons for it. We just need to see if that continues in the near term, because the outperformance is once again looking very, very stark. Sonia.
Oh, absolutely. And there are problems galore, right? You can't run away from them in what's happening across the globe. But back home, there are some positives that I want to talk about. The auto sales for the month of September have looked pretty good. In fact, most pockets, the standout performer definitely was Royal Enfield. So it just shows that consumption is back in a big way. Royal Enfield sales more than doubled this time. Of course, the new Hunter 350 has received an amazing response. So that entire category of premium bikes doing very well. Ashok Leyland has seen the highest sales since March of 2022. So in that context as well, infrastructure is back, medium and heavy commercial vehicle sales are back, and tractor sales have seen a sharp rebound. So all three pockets are a barometer of both consumption as well as trends in the rural market, all looking pretty good. So we'll keep tracking that space for you closely. But let's kickstart the show on that note. On the equities front, first up, we have a comment coming in from Neelkanth Mishra of Credit Suisse, who says that the 50 basis points repo rate hike from the MPC to 5.9% and the unhinged stance was as expected. RBI has cut their GDP growth forecast by 20 basis points to 7%. To incorporate the weak GDP print in Q1 and upgraded Q3 forecast by 50 basis points and Q4 by 60 basis points to 4.6% year-on-year. They've also introduced Q1 FY24 at 7.2%. The uncertainty is now on the peak rate, which they believe should not be to address the balance of payments deficit, the biggest risk currently. Based on muted incremental inflationary impulse, he says further rate hikes may not be needed.
Okay, let's get you some money market views then. B. Prasanna of ICICI Bank says that the dollar retreated from the highs against the currencies as global risk recovered. Asian and emerging market currencies fall halted as aggressive Chinese central bank intervention lifted the Chinese yuan. Rupee also recovered from the low, helped by the 50 basis point rate hike by MPC and the news of RBI suggesting oil companies using credit lines instead of dollar buying. Continuous hedging flows are keeping pressure on rupee though, and for this week he expects the rupee to trade between 81.30 to 82.
And on the bonds, B. Prasanna says an oversold global bonds recovered during the week as Bank of England swung into action to arrest the slide in bond prices. Back home, even though the borrowing calendar and the MPC were largely on expected lines, continued bond supply and declining optimism on global bond index inclusion took yields higher. He expects the yields to remain under pressure with the 10-year benchmark yield ranging between 7.2 to 7.5% and would be keenly watching any global development.
All right, so that's views across asset classes. Abhilash Narayan is senior